Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on pump and dump stocks and how to spot them and how to be aware of them. Now, just kind of take a little bit just to kind of go over pump and dumps and what they really are. It doesn't always mean that the stock itself is a bad company. Sometimes stocks that are pumped and then dumped might be a decent company, might be a legit company, may even be a great company down the road, but there's promoters, stock promoters behind it, people that have groups and newsletters, shady places that'll pump a stock up to a certain level, and then they're all holding shares because they got in early, and then they at some point when they get all the buyers to come in, then they'll dump the stock, and then people that are holding the stock are the suckers that kind of come in. Sorry, we're getting a lot of Facebook notifications here right now. They'll end up being bag holders. So what happens is, again, some of these companies might be legitimate, but many of them are not. So there's two sides of that coin. There's the side that the company might be legitimate, and then there's companies, newsletters, other stock promoters trying to pump it up. They got in early, they sucker in a lot of people, jack the price up. They then sell their shares. The stock completely drops, and then you have a lot of newbie traders that are left holding the bag, holding their shares. Then there's a lot of other times that these stocks are also just garbage companies. They aren't legit. Sometimes there's insiders that might be, pumping the stock. They might be, some of this stuff is illegal. Again, it's hard to tell which stocks are good and they're just being pumped by, traders, or what other ones are bad and then they're doing insider kind of pumping, or just doing really shady things. But regardless, the one thing you really want that's very important is most penny stocks are, really they're garbage companies. Stocks that are under a dollar, the shot of them making it and being a legitimate company is very rare. Are there ones that might be the next Apple or next Google? Sure, but they're one in a million or one in whatever. It's a very, very small percentage of a chance that's going to happen. Actually, just let me go over here real quick, just to show you here the notifications. If you're not a member of our community yet, we do have a great community on Facebook called the Bullish Bears. As you can see, I get notifications like crazy. We have over 13,000 members. So if you're not a member of our community yet, come join us on Facebook or go over to our website, bullishbears.com. Click on the banner here and come and join us. So you'll see a bunch of notifications coming through because we just get notifications nonstop. We're probably the top group on Facebook right now. I think we are for stocks and stock market. So we're absolutely growing like crazy. So come over and join us. We have a lot of fun together. So that's what all these notifications are if you see all these Facebook ones. So again, you want to be careful. These stocks that are under a dollar, the majority of them are garbage companies, right? But you're going to see newsletters, you'll see websites promoting them because they're penny stocks. So a lot of newbies will get in. They'll want to get in on, because they're cheap. They'll want to get in on a stock it's 30 cents and write it up to a dollar and make a ton of money. And you can do that. But the whole important thing when trading stocks like penny stocks is not to hold them long term unless you're willing to completely risk your money. It's to day trade them or do things like swing trading them, like trade them every few days or few weeks. But you want to, even before you even consider thinking about getting into penny stocks, you need to know how to find proper support and resistance levels. That means you basically want to buy low, sell high, not buy high, sell low. And what happens with a lot of these pump and dump companies is these traders, they got in, let's say at 20 cents, and they're going to slowly pump that thing up close to a dollar. And then they're going to get all the newbies to come in. And at that point, they're getting the newbies to really buy high. And then when they're going to go and sell and they're going to make their profits. And now the newbies are left holding. So in essence, they bought high, which is at resistance levels, and then many of them sell low, which is at support levels, because they're going to see their money dwindling. Now I'm going to show you a few options here. This whole video is not going to be how to trade penny stocks or anything like that. I'll give you some pointers, but I want to show you some ways on how to spot companies like this, how you should potentially trade them, and just give you the insight behind them. And just really, again, to let you know the majority of penny stocks are garbage. It's just the way it is. And day traders, day traders are good. Day traders are not bad. Day traders are just trying to make profits many times off of these pump and dump companies. So a day trader is not doing anything wrong by trading a stock up or shorting it with these penny stocks. It's the pumpers behind it. So it kind of like it's the tug of war between the buyers and the sellers. Some people are doing things shady, and then other people are just capitalizing on it. So you can make a lot of money off of pump and dump companies if you know how to trade them. Again, if you want to be the absolute safest way to trade a pump and dump, you want to day trade them. That means getting in and out of that stock within that same day, usually within an hour or two, maybe less. Sometimes, again, swing trading them, holding them for a few days, maybe a week or two, as long as you know how to find support and resistance levels. Again, this video is not going to be about support and resistance, but make sure that you learn about support and resistance when trading any type of stock, never mind pump and dump companies. So let me start with this company called ENVV. I'm not saying this is a pump and dump company. I don't know much about this company, but it really just to show you how a pump and dump looks. It looks very much like this. You'll see, look at all these green days, they're going up, right? And then it pulls back a little bit. So this is an area of support. This right here, this blue line is a 13 EMA or exponential moving average. So what happens is the stock went up and then it pulls back right here to the moving average and then it keeps going up. You'll see these like patterns. It's a bull flag, bull flag. And then you'll see it goes all the way up. And what tends to happen with stocks, with most stocks, but really also specifically with pump and dump, and penny stocks, they find resistance levels at whole and half dollar amounts. That's when people tend to take their profit. So a lot of times these pump and dumpers, they might get back in a stock somewhere down here or even up in here, and they'll kind of just slowly start pumping it up, pumping it up, pumping it up, and then you'll see these bigger green days happen. And then when they get all the newbies suckered in, and they'll think, oh, the newbies might think, hey, I want to hold this thing to $1. And what will happen is these dumpers will come in and they'll say, no, we're not going to bring it up to $1. We might sell it off right beforehand. So again, it's the whole psychology of getting you to get in, that slow burn, getting you to see your money go up and then getting you stuck, and then boom, and look at this. All the way down, huge excuse me, a huge dump like this. You'll see today, there's one right here that went from 83 cents all the way down. It dropped all the way down to 27 cents. That's a gigantic drop. Now, again, I don't know anything about ENVV. I don't know if it's a legitimate company or not, but this is how a pattern and how some of these companies work. Now, this was a slow burn right here. Sometimes they happen much quicker. One of the most notorious pump and dump stocks that you could ever possibly look at is the company Dries. If anybody ever tells you the company Dries is a good company, it's not. It's absolute garbage. And they sucker people into the stock all of the time. And you'll see, look at back here. There's been so many different reverse splits and everything like this. But look at this. Look at this. The stock is absolute garbage. So this stock never traded at $799,000. But some people will try to like get you to think that it is. And, so when they pump it, they'll be like, "Oh, this company was it's 799,000." Or if people actually look their research, they'll say, "Well, this stock was actually at $100." I think whenever this went up to, I think this is at around $100. I think it went up to. So I think when I saw this, I think it was like in November of 2016. This stock I think went all the way up. I believe this was actually technically $100, not the 799,000. But you could say, well, even so, this stock is $2 now. It was $100 at one point. But look at it. How many times was it ever at $100? Going back, you'll see these stocks get pumped up, and you'll see usually it happens sometimes with 2 or 3 days, and then bam, a huge sell-off. So this is one of the most notorious ones. This is a huge pattern. It's known as the head and shoulders, or also known as the FU pattern. put the initials FU to U together because it looks like either number one, a head and shoulder, you'll see a head and then two shoulders, or you'll see an FU, which would be here's your knuckles and then the big middle finger basically saying, screw you, we got your money. And that's kind of how these pump and dumps work. This is a very classic pattern. So again, these are penny stocks, many of them just garbage companies. These promoters come in, they pump it up, they sell it off, and then boom, you get stuck holding the bag. And many innocent people lose a lot of money that way. And that's how pump and dump companies work. Let me take a look at a few other ones just to show you. Just to give you an example, the marijuana sector, the pot sector, you'll hear a lot about pot stocks. The majority of those companies are absolute garbage and they are pump and dump stocks. You'll see stocks such as, let me go back, Can is a notorious one as a marijuana stock. So you'll see right here, you got to go back to like the weekly charts here. So you'll see there was a good run. This area right here, you'll see this was during the election where marijuana was legalized in California and a few states back here in November, right leading up to the election. And then you'll see it kind of starts to sell off. But if you go back to like 2014 time frame, let me go back to, let's see if I can go here. Look at this. You'll see huge pumping and dumping. Look in this 2014. You'll see the stock right here, Can, went all the way up from $1 up to $9.50. Again, you have to go look and see. This wasn't one day, but you'll see just this was over in like just that 1 month. It got pumped all the way up, and then look at boom, crash all the way down. So if you were like, oh, let me get in on Can, marijuana's really rocking and rolling, you're going to get in here. Let's say they suckered you in somewhere up here in $7, $8. They crashed it down, and then you're holding it all the way down to 33 cents. That's notorious pumping and dumping. CBDS, that was another one from back then. Let me see. This one you might not see. Yeah, you'll still see it right here. You'll see it kind of went from $4.44 all the way up to $9, and then boom, crash all the way back down to 30 cents. And then what happens? Like the election's kind of coming around again, people pump it back up, and then they sucker you back in and it drops all the way back down. So the majority, again, of these companies that are, under $3, they're garbage companies. Now you could say, well, how about these ones? These are $4 and $5 companies. Well, are they really? Because you'll see, most of the time, a lot of times they're down here in sub couple dollar stocks, and then they get pumped up every once in a while. And you just want to be careful of that big FU pattern, like that pattern that you'll see. That's like the big middle finger. You'll see a lot of them right here. It's like kind of like goes up, comes back down here, real short, goes up, comes back down, up, comes back down, and they don't stay consistently going up. You'll see it's really mostly a consistently going down stock. Other ones to be aware of are another one like ETRM is another very notable one. Let me try to go back to the daily chart, see if I can get a better look here. Oh, perfect. Here's a great example. Look at that. Complete and total FU pattern or head and shoulders. See that? It was down here to $1.75, and look at this one. Pumped up over 1, 2, 3, 4, 5 days. It went from $1.75 up to $30, right back down to $3 or $4, whatever, $5. So imagine that. So now you're getting this, and then it gets pumped all the way back up. Now let's say, oh my God, you got to get in this stock now. It's $8 or $9, and it's riding all the way up, and you're like, wow, I'm going to be rich if I just bought 1,000 shares, and I can make $30,000. But if you got suckered somewhere in here, and then it just jacks all the way back down, you're stuck bag holding. And that's, again, how a pump and dump works. So when you're looking at charts, it's so important to be aware of patterns. Traders trade on patterns. It's very important to get it in your head that, again, the majority of these penny stocks are garbage companies. They're pump and dumps. They're not worth money, and traders are going to day trade them. So these are very popular stocks that I showed you for day trading. They're not popular for investing. They're only popular for investing for the people that are new that don't realize that these penny stocks are garbage. So the traders will trade them in and out, make their profits, day trading or swing trading them. They'll sucker in the newbies that think they're investments, and then those are the ones that get all stuck here and end up holding these stocks for weeks, months, even years. So again, just always do your proper research when trading any stocks, especially penny stocks. Again, it's okay to trade penny stocks. Penny stocks are great. I love trading them. I trade them every single day. Um, but I day trade them. So I'm not going around pumping them. I'm not saying, hey, get in ETRM while I have a whole, while I'm holding a position to pump it up. I just watch, I have all these scanners set up. I see what's happening and I take advantage of it. I take advantage and try to scalp 30, 40, 50 cents, maybe even a dollar or two depending what's happening each day. But I know that I'm not going to put my money in here at $4 and say I'm going to hold 1,000 shares of ETRM because it was once at $30 and it's going to go back up there again. Not going to happen. It may get pumped again, but there's also the risk of, okay, let me hold 1,000 shares, let's say, of ETRM at $4 today. So let me put 4 grand in because it was at 30,000. It was at $30, whatever, less than a year ago. The other flip side can happen is I could put my $4,000 in, and rather than it going back up to $30 again, it might go down to 30 cents. And now I lose $4,000. So what happens to the majority of people that hold these crappy pump and dump stocks. They crash and burn, and people lose a ton of money. So that's really what to look for. Really look at these patterns. Again, not all of them will be patterns, but pump and dumps, usually they run up for a few days and crash. Or you can have something like this one right here, ENVV, which is a nice slow burn. They slowly get you. Look at how affordable they make it. You could get in 30, 40 cents. And as it's going up, you're like, oh man, I could buy 1,000 shares. That's only 350 bucks. I can ride that up because in the past it was a big company. Actually, I don't even know. Let's take a look where it was in the past. Uh, Look at this. So you could see how it just kind of pumped up. But in the past, yeah, you can say, well, this thing was $1.50, but that was way back in 2014. How do you know that's going to happen again? So again, these promoters will say to you, hey, get in now at 30 cents because this stock was $1.50 3 years ago. So get your shares now. But that's the way that they sucker you into it. So be absolutely careful when trading these stocks. So that's really kind of just what I want to talk to you about with pump and dumps. I want to show you some examples, give you the psychology behind it. Make sure you trade these sub penny stocks or these, these stocks that are under a few dollars. Either day trade them or swing trade them. But again, before you trade whatsoever, make sure you know about support and resistance and how to trade these types of stocks. So again, if you need more help, if you want to join a community that will love to help you, we have a great community on Facebook called the Bullish Bears. Come and join us over here. We're a great community. You can find us on Facebook, or you can go over to our website, bullishbears.com. The link is below in this